Welcome to Journey to XRP. I hope you're all doing well and having a great day no matter where you are watching. It looks like tomorrow will be a big day for crypto and the world's financial markets as a whole. There are a lot of traders, institutions, and experts who are very worried about what is happening in Japan. What can you expect today? How do I see this situation with XRP? I also want to talk about some important new information that has come in lately. If you want clear, to the point analysis of Ripple, Xrp, and world banking, make sure you sign up. If you like these short but useful updates, please type X in the comments and click like. Now let's get to work. Before we talk about Japan, I want to quickly talk about what happened in the crypto market. It tells us a lot about how traders are feeling right now. Early this morning, when I was in the Eastern Standard Time Zone, about $60 million worth of crypto shorts were closed out in just 30 minutes. It's clear how active positioning has become just from that. Then later that same day, the other side of the market was wiped out with long positions worth about $150 million being closed in just 30 minutes. Fundamentals don't change quickly, so prices don't move in that way. That's because traders move too quickly, are emotional, or are using too much leverage. I want to bring to your attention something important that I didn't have time to fully talk about yesterday. For once, CoinDesk put out a story that wasn't a negative attack piece. It said that leaders from Coinbase, Ripple, and Andreessen Horowitz would be meeting with Senator Tim Scott to talk about the planned crypto market structure bill before talks start in January. Most people don't understand how important this is. There is no such thing as regulation that happens outside of the market. It is actively deciding where this business will go. One thing that stood out is that Ripple is still there. There are many times when Ripple is at the table with politicians, regulators, and people who make decisions. These are the people who decide how the game is played by everyone else. That table doesn't have many places, and Ripple always has one. That should help you understand how XRP fits into the bigger picture over time. Let's talk about what will happen tomorrow. Today, the Bank of Japan is likely to make its decision on interest rates. At the moment, the market thinks there is a 98% chance of a 25 basis point rate hike. This is not a small event. For decades, Japan has been one of the most important sources of cash around the world. When Japan moves, markets feel it. We can see a clear trend if we look at the past. BTC dropped about 26% in just 8 days after the Bank of Japan raised rates by 0.25% on July 31st, 2024. Also, when rates were raised to 0.50% in January 2025, Bitcoin fell about 25% in the next 20 days. Prices on the market now think that rates will rise to 0.75%, which would be the highest amount since 1995. That alone explains why markets are getting more tense. What I think about it is this: the market is very emotional right now. Traders are getting ahead of the news, stories are getting around quickly, fear is already being priced in, even though nothing has happened yet. The market works this way. They don't wait until they know for sure. They react based on what they think will happen. And these emotions are stronger in a market with a lot of speculation, like crypto. One news story, rumor, or small surprise can cause big moves in either way. But this is very important to know. Price changes in the short run don't mean that the fundamentals have changed. If there is a big drop after Japan's rate decision, I want to be very clear about how I will handle it. I will be a buyer, and I will be a very active buyer. This isn't because I want to trade the news, but because I know what I have in XRP. XRP isn't a joke coin. It's not based on hype. It's the building blocks. It is made for large-scale liquidity, payment, and real-world financial use. In a global system that needs all three of these things badly, its value is tied to speed, efficiency, and lower costs. Unpredictability in the short term doesn't erase years of work, partnerships, regulatory growth, and real use. In the short term, markets are very good at punishing people who are patient. They wake people up just before things become clear. In the past, the best chances have come up when people are scared and not sure of what they want. People who are set up for the long term can benefit from emotional selling. I'm not thinking about the lights for tomorrow. I'm thinking about how XRP will fit into the next generation of money systems. In that future, there will need to be a lot of cash on hand, reliable payment rails, and assets that can be used all over the world. Once you know that, short-term drops stop looking like danger. They start to look like chances. It has been a major source of cheap cash for the whole world's banking system. Japan's interest rates were very low, so money moved out of the country and into stocks, bonds, and risky investments like crypto. Markets were formed by that force for years. That flow starts to change when the Bank of Japan raises rates. Investors who borrowed yen for a low price now have to pay more. The yen becomes more appealing to hold at the same time. This makes it necessary to undo situations that were formed over a long period of time. Due to the high level of debt, even a small rate hike can have a big effect on these situations. That's why the market is tense. Traders know what happened after the Bank of Japan raised interest rates in the past. We saw sharp drops in crypto each time, followed by strong rises again. We can learn two things from that trend. To begin, liquidity changes are important. Second, in the short term, the market often responds too quickly. At the moment, fear is being priced in before the event. In liquidations, volatility spikes and rapid changes in how people feel, you can see it. This does not mean that smart money is going crazy. This means that sellers with short-term goals are being pushed out as loan terms reset. Those things happen all the time during macro changes. Retail investors have a hard time in this setting because emotions get in the way. Red candles seem to last forever. Seeing green candles makes me feel sure. Professionals, on the other hand, look at structure, not feeling. They question things in different ways. Has the reason for using it changed? Has the legal environment changed in a way that hurts the asset? Has the long-term desire gone away? When it comes to XRP, the answers are no. In fact, the long-term picture for XRP keeps getting better as we look further out. Ripple is not feeling the changes in the market. A plan that has been in place for years is being carried out. A lot of projects are interested in short-term price changes and stories. Ripple, on the other hand, is interested in rules, infrastructure, and ties between institutions. This was made clearer at the recent meeting with politicians. Cryptocurrency rules in the US are going towards structure instead of outright bans. Since Ripple is directly shaping market structure laws, you can be sure that XRP is seen as part of the answer and not the problem. This is important because big banks don't put a lot of money into assets that aren't clearly regulated. As things become clearer, the market starts to tell the difference between noise and reality. Tokens that don't solve real problems will have a hard time. XRP, on the other hand, is designed to solve a very specific issue. It moves value quickly and efficiently around the world without requiring institutions to pre-fund accounts everywhere. After interest rates stopped being tied together, this became even more important. It is unfair for Japan to raise interest rates while other economies are under different kinds of pressure. It gets harder to keep track of balance sheets. Having access to cash costs more. In that setting, being efficient is a must. It has to be done. This is where the creation of XRP is very important. It lets institutions get cash when they need it without keeping big balances that aren't being used. Settlement takes only seconds. There is less risk. Money is free. These are not sales points. These facts about the balance sheet are very important to financial institutions. This doesn't change when global events cause short-term drops in the market. They open up chances for people who can see the bigger picture. That's why I said earlier that I'm ready to buy when prices are low. It's not because I like instability, but because I know the difference between price and value. It is also important to keep in mind that markets often change before the news does. When the news turns good, a lot of the chance has already passed. Fear makes you feel bad, but it also tells you things. It lets you know who has weak hands and who is clearing advantage. For people who own XRP, right now is a test of confidence, not blind belief, but conviction based on facts. It's more important to know why you own something than to know where it might go tomorrow. If your theory is based on long-term infrastructure adoption, then short-term volatility caused by macro factors shouldn't disprove it. But discipline is important too. It's not about putting all of your feelings into this. It's about taking a responsible stance based on knowledge. Markets honor people who are patient, but only if they are clear about what they want. As Japan's choice gets closer, be ready for changes, news stories, and strong feelings. But don't forget that this is when the markets reset and get ready for the next wave. Liquidity shocks get rid of extra. Strong projects last and get stronger. We'll talk about what really makes Ripple different from the other cryptocurrencies in the next section. Not ads or claims, but doing what you say you'll do. We'll talk about why relationships, law, and real-world use are more important than hype, as well as how that affects XRP's long-term path. This is where Ripple clearly stands out from the rest of the crypto market. Anyone can talk about getting in the way. Anyone can write white papers or say big things. The slow, hard work that is needed to join the global banking system is not done by many businesses. Ripple has done that job over and over again for years. Ripple is different from other crypto projects because it focuses on relationships instead of price movement and stories. These connections aren't with traders or people who have a lot of power. They're with politicians, regulators, central banks, payment service providers, and big banks. This isn't very interesting for social media, but this is how real banking infrastructure is built. The talk with US lawmakers not long ago is a great example. Ripple wasn't there to make XRP look good. They were there to help make rules for how the market works. That is very important information. Ripple and XRP are getting ready to work inside the system, not outside of it. This is very important to institutions because they can't work when they don't know what will happen. One of the biggest problems with institutional acceptance is that regulations are not always clear. As soon as that wall starts to come down, money that has been waiting starts to pass through. That doesn't happen all at once, but it does happen slowly over time. This is good for XRP because it was always made with compliance and use by institutions in mind. How Ripple works with partners is another big difference. These are not just empty words. They are business ties. Banks, payment companies, and financial platforms don't want to try out new systems that can't grow or work with what they already have. The XRP ledger was made to handle a lot of transactions quickly and cheaply. It's not a mistake, it's how it was made. Ripple also knows that adopting something doesn't mean changing everything. A lot of projects mess up in this way. They try to cause too much trouble too quickly. Ripple takes a different method. Along with other methods, it works. It ties them together. It makes things run more smoothly without making big changes. This makes the idea of adoption a lot more likely. In this plan, XRP is the most important asset because it is easy to sell. It's not up against every other symbol. It serves a specific purpose by making sure that all currencies and systems can get cash. As global finance gets more complicated and broken up, that job becomes more important. It's also important to talk about safe coins, which are part of the same plan. Ripple's work with controlled stablecoins lets it be used in more compliant settlement situations. Stablecoins handle the value. XRP takes care of cash. They work well together to make a strong set of tools for current financial infrastructure. This is important because institutions don't usually depend on just one tool. They have plans. Plushies are used. XRP isn't meant to take the place of regular money. It's meant to make moving value between them quick and easy. That's why it works so well with the current setup. Now look at how this stacks up against most of the crypto market. A lot of projects are still looking for stories. It's NFTs for one run. Next time it will be AI. It's something else the next time. Ripple's main goal has not changed. That stability is important. Financial institutions care a lot more about dependability and predictability than they do about hype. This is another reason why XRP has stuck around while many other projects have failed. It's not because of how well the price did. It's because it's useful and lasts. Even when people felt bad, Ripple kept growing. That's what long-term success looks like. This difference becomes more clear as markets get more picky. Not all things get the same amount of liquidity. It goes to assets that have clear jobs, good governance, and that are accepted by regulators. XRP does a better job of meeting these needs than most. This doesn't mean that XRP won't be affected by changes in the market. It's not going to happen. Sharp moves can still be caused by macro shocks, rate changes, and events that affect the flow of money. However, unpredictability does not equate to value. Structure does that. This part is very important for people who own XRP. It's likely that you will be let down if you hold XRP because you think it will act like a joke coin. It makes sense to hold on to something during these times if you think it will be important in the future of world settlement. Until it's not, execution is dull. It doesn't change prices right away, so most people don't pay attention to it. But performance becomes very clear when systems go live, when volume grows, and when institutions commit. The process is still young, but it's clear where it's going. Ripple isn't trying to get attention. It wants to get contracts, build trust, and get rules to work together. That is the way that infrastructure is made. Some people mix up theory and usefulness. A lot of buyers want to make quick money or are affected by news stories. XRP is not like other coins. Its worth depends on how widely it's used in real life, how well it works with infrastructure, and how quickly it speeds up global banking. That's why it's important to see the bigger picture. XRP is meant to give businesses and payment providers access to cash. It lets money move quickly between countries without needing huge amounts of money to be put into accounts ahead of time. In the old method, banks had to keep dollars and other currencies locked up and not being used just so that payments could be made. That is dangerous and costs a lot. XRP changes that by being a bridge at the time of payment. This lowers the stress on balance sheets and the risk to the whole system. This idea is not just a theory. This is a sensible answer for how money moves today. That, along with Ripple's work with regulators, makes the long-term picture clearer. XRP isn't just waiting for people to start using it. Ripple is working hard to make sure that financial companies can use XRP in a safe and reliable way by making sure that the right laws and rules are in place. That's why it's so important to meet with regulators, lawmakers, and leaders. They're not about making a fuss. They are meant to make it easier for institutions to take part. And institutional involvement is where things get really big and valuable. Stability is another important thing. A lot of the time, markets mix up instability with weakness. Price drops in the short term due to things like interest rate hikes or economic shocks don't hurt the long-term value of XRP. Instead, they can open up chances for patient holders who know how useful the asset is. In the past, the biggest changes in XRP have happened after times of fear and emotional selling, when the price was wrong for a short time. There is no gambling here. This is a methodical look at how markets work and how they are positioned structurally. XRP is different from simply speculative assets because it can be used for business purposes. Some coins are used for speculation or tokenomics games, but XRP is used for real settlements, providing liquidity, and making it easier to send money across borders. All of these uses keep XRP locked in operating cycles, which lowers the amount of XRP that is available and supports its long-term demand. That kind of structural acceptance isn't common in crypto. It's usually only seen in assets that are built into big financial systems. It's also important to know that XRP can be used with systems that are already in place. It's not trying to take the place of the dollar or mess up regular banking overnight. Instead, it makes it easier for dollars, euros, yen, and other currencies to move around. This design makes sure that everything works together, which makes adoption much more possible. When a project works with current financial systems, institutions are more likely to get involved because it lowers the risk of operational problems and not following the rules. People who own XRP need to understand these processes very well. A lot of the time, price changes only last a short time. The infrastructure, governmental alignment, and widespread use of XRP are all long-term trends. Short-term drops don't feel like danger if you keep your eye on the basics. They feel like chances. Being patient pays off when an asset has real, proven uses and support from institutions. That's exactly what XRP gives you. This also shows a very important lesson for all crypto buyers. Truth is more important than hype. Buzz on social media, meme culture, and popular stories can get people excited for a short time, but they rarely add value over time. XRP's growth has been steady but quiet. Its relationships, clear legal language, and useful use cases give it a base that other projects can't copy. Institutions look for that kind of base, and that's what makes real long-term price support. We should also look at how money is moving around the world. Changes in interest rates, tightening cash flows, and big events in the economy will continue to cause instability. That makes sense. It's how markets respond to changes in the world. The value argument of XRP is made to deal with these problems. As financial systems get more complicated and the need for quick cash grows, assets like XRP become necessary. This is structural demand, not guesswork based on hype. Finally, XRP's future will depend on how well it works with real-world banking processes. Each operational use case makes the job stronger. Every relationship between institutions makes it more popular. Every time we talk about regulations, we gain confidence. All of these things work together to make a way to useful value that is based on real demand, not guesswork. This view is much more important for people who own XRP than daily price changes. Let's see the big picture for a moment. XRP isn't just another coin that people buy and sell to make quick money. Its real value comes from how useful it is, how well it works, and how well it fits into world finance. Ripple has worked for years to build partnerships with policymakers, regulators, and big banks. This work doesn't always get the most attention, but it is what makes XRP possible as a core liquidity asset in a system that needs faster, cheaper, and more reliable transfers more than anything else. Putting that together with the bigger picture, like what's going on in Japan, makes it clear why XRP is important. Managing liquidity, currency risk, and balance sheet limits can be hard for central banks, governments, and institutions. XRP is a way to lower those risks while still letting the US dollar and other big currencies stay at the center of world trade. It's not taking the place of money. They are getting better at what they do. That's a very important difference that lots of buyers miss. Things could get volatile tomorrow when Japan decides on its interest rate, but that doesn't mean XRP isn't valuable. People who understand the basics can often take advantage of short-term price drops to buy. Weak hands are shaken out by emotional selling, but the demand for XRP keeps growing. Needs for liquidity, cross-border settlements, and real-world operational use build a base level of value that short-term macro events can't just take away. Because XRP is used in real-world banking processes, it is also less risky than many other assets. When financial institutions use XRP to settle transactions or get cash, it gets stuck in operating cycles. That lowers the supply that's available, keeps prices stable, and slowly changes the market from being based on speculation to being more mature and driven by usefulness. This kind of structural acceptance can have a bigger effect over time than pumps that are based on hype ever could. Regulation is also very important. The fact that Ripple works hard to influence politicians and policymakers is good for XRP. This is important because clear rules encourage institutions to take part. Institutions stay out of danger and don't take risks when there isn't guidance. When things are clear, money comes in. Ripple's plan isn't based on short-term price changes. In order to make institutions feel comfortable using XRP in their job, a framework needs to be built. That's why how Ripple is run is more important than any big news story. The bigger picture of the banking system is also important. There are a lot of traditional settlement networks, but they don't always work well. XRP's ability to provide instant, low-cost liquidity across countries solves a real problem that businesses and banks face every day. As more people use XRP, it becomes more useful, and its long-term value is tied more and more to real financial results rather than speculation. The most important thing for holders to remember is to be patient and understand what's going on. XRP is made to last a long time. Short-term drops, instability caused by macroeconomics, or news noise shouldn't take your attention away from the bigger picture. Operational usefulness, regulatory progress, and institutional adoption all work together to make XRP a strong candidate for a part in the future financial system. Why is XRP different from many other cryptocurrencies? Because that's where the real value is. But it's also important to keep your focus. This doesn't mean you should buy things without thinking or trade without thinking. The best way to do things is to use fundamentals and structural adoption to guide your strategic strategy. It is very important to know why you keep XRP, because it is infrastructure, not a trend. Making choices based on emotions rarely leads to consistent success. The way XRP is set up encourages smart, long-term thought over hasty reactions. Looking to the future, XRP's path looks good. The need for XRP is expected to increase as more financial institutions look for quick ways to settle transactions, as regulations become clearer, and as operational use grows. This doesn't promise price increases right away, but it does build a strong foundation for value over the long run. Adoption, relationships, and execution are more important than short-term price changes. Finally, XRP is set up differently than most coins. It was made to be quick, efficient, and useful for real-world money matters. Ripple's approach is based on execution, working with regulators, and building relationships with institutions. Changes in interest rates in Japan are an example of a macro event that can cause short-term volatility but not damage the basics. If holders are well informed, these times can turn into chances instead of risks. XRP is one of a kind in the cryptocurrency world because it is useful, widely used, and in high demand. Finally, people who own or are thinking about buying XRP should know how it fits into the global financial system, see its long-term promise, and be patient during short-term price drops. In the end, success will depend on execution, support, and usefulness. Not only is XRP in the crypto race, it is also making a name for itself as a key currency for global liquidity. The thing that makes it unique is also what makes it worth thinking about for anyone who is really interested in the future of banking. Know what's going on, follow through, and always keep your eye on the basics. In this market, that's how winners are made.